Hello, party people. What a fucking shitty few weeks this has been. My goodness. I had a lot of people on last time. I don't know how everyone found me. I had like 40 or 50 people on. I only have 8 people on right now, but you 8 people are wonderful. So I have the Wheel of Fortune on. I mean, Price is Right on behind me. I thought I'd leave it on this time. Where do I begin with BridgeBio that hasn't already been said all over Twitter? You know, it's funny. People talk about this as a crowded name on Twitter just because the two best people in FinTwit like it, which is sheep and sport. I don't know how it's crowded besides that. Doug also likes to post a lot about it, I guess. But I hardly think it's a crowded name by any means. For those of you that don't follow me, I have added substantially to my BridgeBio position. A lot of it was options that are going to expire worthless. I had July weeklies and I have a lot of August that are all going to expire worthless. I bought Common and I bought just a shit ton of Jan 25 and Jan 26 call and call spreads. The Jan 25s are 35 calls. I bought them naked and I bought them 35 45s, but mostly I like them naked for now. And then on Jan 26s, I bought 35 55 call spreads. I paid 330 to 350. And I will go through in detail why I like these trades and why I think this is a massive mistake by the market. So the first thing that we need to address is yesterday and today. By the way, I have a very hard time pronouncing the name of these drugs. So I'm just going to call the Pfizer drug TAF, the BridgeBio drug Acor, and the Alnylam drug Voot. Okay? So that's what I'm calling them. Yesterday on the Voot top line data and today, ALNY added about $9 billion in market cap. And it was thought that there was probably about 8 billion embedded before if they would have missed completely and there wouldn't have been any market for the drug, for this indication. So all in all, the market is valuing the net present value of this indication for Alnylam at $17 billion. BridgeBio lost $1 billion of market cap yesterday and currently is sitting at about a $6 billion enterprise value. Okay, 5 billion market cap, fully diluted, and 6 billion with the debt, net of debt. Being a little conservative with my numbers, but we'll call it 6 billion, okay? Clearly, if Alnylam, I can't say that name of that company very well. ALNY, the market thinks that, again, this is just for this indication, that Voot in this indication is worth 17 billion, and BridgeBio is currently trading at 6 billion. There's a huge disconnect about what the value is of Acor. Okay. Further, BridgeBio has an entire company outside of Acor. They have 3 phase 3 readouts next year. And there was a note today from Zuho. I don't know if I'm saying that name right. Salam from the old BMYRT days. And he generally thinks that those 3 assets have a risk-adjusted peak revenue number of $2 billion, an unadjusted, a risk-unadjusted revenue number of $3 billion, and another $1 billion opportunity for a different indication for the one that most people are most excited about that competes with BioMarin. On that $2 billion risk-adjusted alone, using a typical 4 times sales number for valuation, gets you an 8 billion valuation for BridgeBio, 7 billion net of debt, and $35 a share versus the $24 it's trading at, valuing Acor at 0. Okay. But here's the thing, and I'm not just taking crazy pills, and I'm not in a cult anymore. The old SRPT days, was cultish for me. You know, I don't fall in love with stocks. I have no problem selling stocks. I sold all of my Liberty TripAdvisor after it blew up. I sold all my Groupon a long time ago, obviously, right? I unfortunately sold all my Dell. I don't fall in love with stocks. So for me, if I thought that this data that came out yesterday was a category killer for BridgeBio and for stabilizers, I would be much less enthused than I am today, because a $35 price target's nice, but it's hardly something to get all bulled up about versus $24 stock price. The reason why I think this is such an incredible opportunity is that the market is currently focused on two things here, and they're getting them both wrong. The first is they're worried about the Pfizer patent expiration. And the earliest that could happen is, I believe, late 2028, which would be 4 full years BridgeBio will have on the market before that expires. Most people think that they will get it extended until the low to mid 2030s, and that Pfizer has no has no incentive to be touting that right now while they're charging payers billions of dollars. That's the first thing people are worried about. They're worried about it going generic, and then people are going to use a combo therapy of TAF on top of VUT, and that will render Acor worthless. The part that everybody is missing, besides the fact that the patent's likely to hold up all the way through the mid-2030s, and they can't do combo therapy until it's off patent, is that we have not seen the full data from VUT, and it's extremely likely that this full data, I should say extremely likely, it's very likely this full data, when put side by side with the Acor data, is not only not superior, but is inferior to the Acor data. When that comes out, you tell me how the disconnect will fix itself. This has $17 billion embedded in it for this indication, and BridgeBio has negative $3 or $4 billion embedded in it for this indication. Okay, maybe negative $3 billion based on a $35 stock price for the rest of the business. Okay, there's numerous things that were said in that conference call yesterday, or more importantly, what was not said, that should make people highly skeptical that on an apples to apples comparison, that VUT is better than Acor, either in combination with TAF or as a monotherapy against TAF. Okay. The first big red flag is that in the press release, they talk about month 30 in numerous secondary endpoints. And they don't even tell you what the p-value is. They just tell you it beat less than 0.025. Okay. You can assume it's probably not some great p-value if that's what they're going to offer us with top line, that it just was significant below 0.025. But putting that aside, how come they don't talk about month 30 mortality in that press release? It makes absolutely no sense that they focus on 30-month p-values for multiple secondary endpoints, and then for mortality, just gloss right over it. Let me pull it up and read you exactly what it says. It says, this includes key measures of disease progression, 6-minute walk test, Kansas City cardiomyopathy questionnaire, and New York Heart Association class at month 30, less than 0.025 for all. Importantly, treatment with VUT also reduced all-cause mortality in the overall population and the monotherapy population up to month 42. This was a pre-specified intent to treat analysis that includes 6 months of data, up to 6 months data from the open label extension. Okay, listen, party people. If they had the mortality data at month 30, it was available to them. I can assure you, just like they told us the other 30-month data, 6-minute walk test, Kansas City, New York Heart Association, and that's it. They would tell us that at 30 months for this. It's gone. It's not in the data. okay? So it did not hit stat sig at 30 months, which is the comp with BridgeBio. Anything after 30 months is not comparable to a 30-month trial. We don't even know if it hit stat sig at 33 months or 36 months. Many of these patients had open label administration of the drug after being on placebo for 6 months. There is no comparison to a double-blind controlled study that was placebo till the end, or with TAF being given to some of the placebo group. They both arms were given food for 6 months. Okay, this will all be in label, if it even gets in label, when the time comes for this to be approved. The FDA will be very well aware that you can't deem this drug superior to BridgeBio's drug or even TAF, because you might be giving patients the wrong idea about which one is better to take and misleading them in the market. Okay, I am super confident that we will not see that data when they release the full data in 6 weeks. Okay, in fact, in today's note from Mizuho, he mentions the things that are missing in this data. Okay, we are missing 30-month data from everything, by the way. Was this study even stat sig at 30 months? We have no idea. It likely would have failed. The p-value was only 0.01 at the 33 to 36 months, and we know these things separate dramatically once you get to that third year. Okay, we saw it in BridgeBio's numbers. The curve starts separating dramatically as more people die off in the placebo group. Okay, so was this stat sig at 30 months? What is the cardiovascular hospitalization data? They never reported it. What's the time of separation data? They insinuated on the call yesterday that the time of separation data was shit. They said mortality takes time. That's all they said. Okay, what are the absolute survival metrics? And then what are the comparison data to just tafamidis? Okay, so while they said it had strong effect across all groups, they said it was not powered to show significant change versus tafamidis. I think they said that on the call, which means it did not hit a p-value saying that it was superior to tafamidis. If it's not superior to tafamidis, it's clearly competitive with BridgeBio's drug. Okay, but what's the bottom line here? This is a $15 to $20 billion market. Okay, we do not need BridgeBio to be best in class, though it likely is best in class. Okay, we just need to be competitive. And there is almost no doubt in my mind that when they show the full data on an apples to apples basis, it will be competitive. They will be at best rounding errors of differences between the two drugs. By the way, this drug currently costs twice as much money as what the stabilizers cost. Now, they might lower the price in the market, but it's currently twice as much. Okay, I think payers will probably have some pushback against that when they compare it to these other stabilizers. So what do I think happens here? I think it's clear that BridgeBio is not the company to commercialize Acor. Okay, between the patent expiration risk in 2028 or later and the commercialization risk of doing this alone versus Pfizer and ALNY, which already has a commercial, they already have commercial operations. It seems like it's making a huge mistake by going it alone. This drug in the hands of a Novartis or any number of people that have a cardio field and can plug and play this into their cardio sales force is worth much more to that pharma company than it is to BridgeBio, because they have a much lower cost of capital and they could diversify it across their entire company. The risk of the patent expiration and any risk of whether or not this becomes the market best in class, or it just becomes a second or third player in this $15 to $20 billion market. Further, I actually left something out, by the way. I think BridgeBio will present to us 42-month data as well. Now, it's a little sneaky to do that, of course, because from month 30 to month 42, it's all open label, and everyone was given ACOR if they wanted to stay in the trial. Okay, it's not a trial anymore. Okay, but this data is known to BridgeBio right now because they had 30-month data around this time last year. So a year later, 42 months, it's all there. Now, first of all, BridgeBio has 42 months on the entire population that stayed in open label. Okay. ALNY only has it up to 42 months. Many of those patients, the one that just, the last one to hit the time was 33 months. So it's some range of 33 to 42 months. We'll get the benefit of all 42 months. Okay. What will it look like if BridgeBio puts out what the survival is versus placebo at 42 months? It will almost certainly beat what ALNY just put out. Now, I don't know I don't know what the ramifications are of them doing that, if they're allowed to publish that ahead of, marketing approval or, whatnot. I can't imagine why they couldn't do that as long as they do it with the appropriate disclosures. But what will BridgeBio do on that data? That's a comparison, right? The only difference, again, is that a lot of ALNY's patients were not up to 42 months. But that's, ALNY to prove. They can wait until a year from now and publish at an exact time point of 42 months for all their patients and show us what the comp is. So that's the first thing. I think BridgeBio would play offense or play defense in this matter. But the second thing is, I think once the full data comes out at the end of August, the first day or two of September, you'll see all of this stuff. As my friend told me, we've already seen the best data slice you'll ever see on this ALNY drug. It's not going to get better. It's only going to get worse. And when that happens, all of a sudden, you'll take some of that 17 billion that's in there for ALNY, and you'll be shifting it to BridgeBio. Let's say you only shift 3 billion of the 17 billion to BridgeBio. Well, ladies and gentlemen, that's $15 a share. That's $15 a share. That takes you from 24 to 38 or to 39. Okay, is a huge, huge, huge opportunity for BridgeBio to go up a lot, and they're fully funded. There's no risk of a secondary coming between now and the PDUFA date. Okay, they're on record saying they're funded till the second half of 2026, and they're not going to do a raise, so we don't have to worry about capital call. Okay, let's talk about the royalty that they sold. Now, they sold the royalty before this data came out, but clearly there was some expectation for this data being positive, very positive, somewhat positive, or negative, or whatever. There was some sort of middle ground. Okay, they took in $500 million for 5% of worldwide sales with a cap of 1.8 times, I believe, or 1.9 times. I think 1.8 times. The only caveat I'll give you with that is that in 2027, it could go to 10% of sales, probably based on whether or not the sales are shitty or not. But we'll use the 5% because we don't know what the details are of what could take it to 10%. On a very conservative basis, that 5%, $500 million royalty deal valued the NPV of this drug, ACOR, at over $10 billion. Okay? You could do the math. If the drug does $1 billion a year in sales, they're pulling in $50 million a year. It takes 10 years to make their money back. Okay, they clearly did not think it was going to do 1 billion in sales, but multiple billion in sales, and they were going to recover their 500 million times 1.8 much sooner than 15 or 20 years from now. Okay, so what do I think is going to happen? I think that that BridgeBio are economic animals, and they will sell or partner this asset domestically before the end of the year, probably before the PDUFA date, so that they don't have to execute that royalty agreement. Though the royalty agreement is so goddamn good that I'm not so sure that a buyer would care if it was executed or not. They got such a good deal out of it. So, it doesn't really matter whether they do it before or after the royalty agreement goes into effect. What can they get for ACOR, right? Well, I just told you that ALNY right now is being valued at 17 billion. that drug, okay? I mean, it seems crazy to say this, but there's a case to be made that BridgeBio is best in class. And if it's best in class, and if they're not worried about the IP until mid-2030s, BridgeBio is worth 17 billion, okay? But of course, they won't get 17 billion for it. Can they get 8 billion for it? I think that's a very low ask. That would be 4 times 2 billion of peak sales, which would give them 10 to 15% market share of this market with a best-in-class, most likely a best-in-class treatment option, okay? If they got 8 billion for it and they got it before the end of the year and they spun off the rest of the company, what does it look like? So 8 billion, $1 billion of it pays off the debt, another $1 billion of it used to capitalize your new company. That leaves you with $6 billion of cash for proceeds. That would be $30 a share. We'd all get $30 a share, okay, in cash. You're then left with NewCo, which is capitalized with $1 billion, and we just talked about has $2 billion of risked revenue assets left that I think is worth $8 billion on that. Okay, you have the $1 billion in cash. That's $9 billion, and that $9 billion is worth, I think, $45 a share. 2, 4, 6, 8. Yeah, $45 a share on top of the 30 you just got, for a grand total of $75. And none of that is aggressive. The 8 billion for Acor is low. I believe it's low based on the data we just got from ALNY. And valuing NewCo at 9 billion, well, it might not be there immediately, but after the phase 3 readouts next year, I believe it will be there. Now, again, this is crazy sauce considering the current enterprise value is below 6 billion, right? And I'm valuing NewCo at 9 billion right now. I just highlight that they know all this and they can do their own Excel spreadsheet math, and they'll do what they think is in the best interest of them. KKR Viking owns 30% of the company, and Neil owns 5% of the company. Okay, he has 10 million shares. He has an opportunity, if he did this, what I just described, and he could take off $300 million of cash for him and his family, and then still run a next generation biotech with a deep pipeline and do everything he was doing before, except put Acor in the hands of somebody that can execute it at a much greater level of detail than they can, given the size of a sales force and the lower cost of capital. So that's what I expect to happen. I think if you, depending on what that data shows, you're going to see BridgeBio stock go up big. And then I think you're going to see it be a bidding war for Acor, because I think it's a substantial asset that now has been de-risked and will be even more de-risked once we see the full data set. This is obviously not the consensus view, though all the BridgeBio analysts have come to their defense. So we'll have to see what happens when the full data set comes out. I think the downside in BridgeBio now, clearly, I think is extremely low. I don't even think there's any value in it being priced for Acor anymore. So if there's no value for it in Acor, I don't know how. I guess it could go to the high teens. If they walked from Acor tomorrow, it would probably go to the mid to high teens. So you probably have like 800 million to $1 billion in value for Acor, which is hilarious. That's less than what they'll probably do in sales in it in the first or second year that they launch. That's how much is being embedded in it. Remarkable. So the reason why I bought the Jan 25 calls is for a buyout. I originally was buying 35, 45 call spreads, but I then changed to 35 calls because the 45 call was too cheap to sell it. And I thought I would sell it after the full data comes out in September. And then the Jan 26s, there's just a million ways to win there. Those 35, 55 call spreads are 340 to 350 or so. And you'll have 3 phase 3 readouts next year, and you'll have a full year of sales for Acor. And of course, you could have a buyout. And any buyout, I think, would value the company at north of $55 a share. So for those, you're getting more than 5x, close to 6x at 340. So those are my favorite play. The Jan 26s, 35.55s. And my second favorite play is Common. I don't think there's any downside here, or very little downside. And then my third favorite play is the Jan 25s, 35 calls. And yeah, I'm so very surprised by the reaction. It's just nuts. You can go pull up BridgeBio's own data. You could see what the curves did. If you added 6 months, let alone 12 months, and you open labeled it, the mortality data would have been insane. Okay. And it's already been said in here, but why is the p-value only 0.01 for L&Y with such a great HR? Sport talked about it today. When BridgeBio's p-value was multiple data decimal points better. Now, you can't compare p-values to p-values directly, but they are a function of how well-powered a trial is and how good the effect size is. And both of these trials were very well-powered. I think even L&Y was even better powered than BBIO by a little bit. So it should have had a robust p-value, not a 0.01 p-value. And it'll be very interesting to see what the curves are. Likely the curve separated very late. And that's the reason why that was the p-value. And again, that speaks to the design of the trial is why it looks superior, not that it is a superior drug, right? Trials can fail drugs all the time and still be a great drug. In this case, the BridgeBio trial, if they could have done it differently and done it the exact same way L&Y just did it, you probably would have seen a superior outcome. And this will be up to BridgeBio to prove over the next few months. I'm highly confident they'll be able to do it. And then what happens to the stock when they do, right? There's going to be sales forces educating these doctors. Okay, it's not just what the label says. BridgeBio will be stacked with data that shows them the apples to apples of the two. They might not be able to prove mortality benefit for Acor, but they'll be able to show you at month 30 what these drugs look like side by side. And that's the most important thing. All right. I'm talking out of my mouth here. Verbal diarrhea. Any questions? I don't see any questions. Not even a single question. Wow. Let's talk TH very quickly. So Target has news coming this week. They said by June 30th, they're going to tell us the ramifications of the contract being dropped. And it's now been 2 weeks in a day, and we've gotten no information. Okay, we haven't gotten a drop bid, and we haven't gotten the updated guidance. Obviously, this is a very big data point, and the stock will probably move dramatically on what happens in the next 3 days. I'm very nervous. It's a very big position, and I'm far from confident that it's going to be a positive update. I have not sold. I've sold a little bit of it, but it's because I have so many options that my delta adjusted position is even bigger than it was when I did my last YouTube. So my net effect of the position is bigger than it was when I did my last YouTube. I've been buying substantial October 8s calls in TH. I've been buying Jan 750 calls with Jan 25 750s, and then Jan 26 750s. I like all three of these for different reasons. The Octobers are enough to see whether or not a deal transpires, of course. That's plenty of time. If there is a deal, we'll get it by October, and it should be for at least, I believe, 1080, no less than 10. So, that 65 cents should triple. Plus, you have a small chance you get a new contract by October OpEx, and you can make money there as well. So I'm pretty big in those October 8s. The Jan 750s could be even better because you're paying $1.10, $1.15 for those with a similar break even. And you will almost certainly see the new contract with those. So even if they walk from their bid, even if the updated guidance is poor, as long as you could see the new contract to be given and what that does to 2026 EBITDA, you could have a stock price above 10 or 11 or 12 anyway on OpEx. And then for obvious reasons, the Jan 26s give you a ridiculous amount of time to see new contracts, potential another bid maybe in the second half of 26 if they do walk, maybe a sale of the whole company. That's more likely. So I'm substantially big in all three of those line items. Mostly spreads, but a lot of just naked long calls. I think that the sponsor's in a real pickle. I talked about this in detail last time, but if they do walk, they can't come back anytime soon. And if they have line of sight into these new contracts, and let's say the EBITDA is falling from 205 to 150 in the worst case scenario, they lose 55 million of EBITDA. And that 150 is going to be 250 once they get the new contracts on board. I can't see why they wouldn't pay $1 billion enterprise value for this. That's 4 times EBITDA, right? 4 times new EBITDA, plus some cost to build it out. So it's a little more than that. So they know more than we know, and we're going to learn a great deal when we find out the new guidance. When we find out the new guidance, does the bid drop then? Right? If I was them, I'd drop the bid then, if you're going to drop it, and then reauthorize the buyback. Because then they're allowed to buy back stock because there's no process happening, and they fully disclose new guidance. So I still think there's a 50% chance that this buyout happens. I don't know the timing of it before October. And I think there is a very good reason why they have not given us the guidance yet. It's been 2 weeks in the day. They're either working on trying to figure out if they can repurpose these assets, or they're trying to finalize a bid. I don't know how they do a bid this quickly, given what just happened. I think it would have to take at least another month or 6 weeks. But I'm on the edge of my seat. Again, it's very risky. It definitely could go to 6 if they announce it was a $65 million EBITDA hit and they are walking. If it's a $65 million EBITDA hit, again, I don't know how it could be that much, but I have a hard time backing into the number from quarter one. 65 million on 200 would leave you with 135 million of EBITDA. If it went to 6, it would be like a $625 million enterprise value. 135 divided by 625. 625 divided by 135 would give you 4.6. You'd be 4.6 times EBITDA at $6. If you assume that the Dilly assets are worth $100 million, which is much, much less than what they've been generating. They were generating, between the two public companies, the Dilly assets were generating $100 million a year in EBITDA. So if you just assume they're worth $100 million, then that $6 turns into $7 from your downside at 4 point, what was the number I used? At 4.6 times EBITDA. That's with a $65 million EBITDA hit, by the way. So I think our margin of safety is really strong. I'm not saying it can't go down to $6 or $7. It probably would, knee jerk, go to 6 or 650 if the number is really bad and they walk. But I don't think it'll stay there very long. And then we're waiting on Unicor data. So that should be in the next few weeks as well. There's nothing to talk about there. All right. I think that's all. Something good has to happen at some point, right? I mean, there's no way, even with me being bad at this, can I get every event wrong. So I'm cautiously optimistic that Target gives us some decent news, maybe as early as this afternoon. And I'm cautiously optimistic that Unicor is already pricing in the absolute worst it could ever fucking tell us in a few weeks, with substantial upside if they do anything right. And I'm not really even cautiously optimistic. I'm optimistic that BridgeBio is going to see greener skies, clearer skies in the weeks and months ahead. And it's striking me as the best opportunity I've had all year for longer term call spreads and positioning for just an amazing next 18 months there. I mean, this was the event everyone was worried about. It's over. And then now pretty much every data point we get going forward should be in their favor. We should get the full data from ALNY, which should show that BridgeBio is either competitive or superior to them. We'll then get a PDUFA date. and then we'll get 3 phase 2 readouts. And if I'm right what I was saying, we'll get a partnership or a sale of Acor in the next 6 months anyway. But you don't need that. But I think it's likely to happen, or a 50% chance of happening, based on what's happening in the market. All right. I don't know why nobody chatted, or I hope I had chat turned on. I think I did. But is this even working? I've never got through YouTube without anybody saying one thing. Can somebody just say hi, just so I know that this was on and I'm not talking to myself? Anybody? You guys fucking kidding me? There's 21 of you there. Jesus Christ. I asked for so little around here. All right. All right. Goodbye, everybody. Best of luck.